We're checking in on the closing price of oil, and not too much movement today for oil. It's down just slightly at $57.86 a barrel. Now this coming as gold surged to a 6-year high on heightened political tensions. Now joining us now for more on this, let's bring in Larry Shover, CIO at Efficient Advisors. And Larry, let me start with the price of oil. We've seen not too much volatility today, but over the last week, it certainly has been a big story. How do you see this playing out, and how big of a risk are the geopolitical tensions with Iran playing into this?
Great question. I do think that we've been underestimating event risk in the oil price, and I think that's why we saw that snapback in price to the upper 50s. Also, we've been overestimating the demand problem with oil. There's so many people think, why has oil snapped back? Is it all because of what's going on in Iran? And I said, well, yeah, that's a big part of it, but I think we also think the demand has been lacking, and it's not really true. We've had mild weather in Europe, also Japan and Korea, Midwest flooding, which has really, really driven down distillate and gasoline demand. So a little bit masked. And so oil price seems to reflect, back to reality with the demand that's really in place.
Larry, how big of an impact do you see the trade standoff between the U.S. and China playing out in the price of oil?
Well, I think it's just a domino effect like everything else. I think it definitely affects our rates, our rate environment. It affects the skew on the Fed, and it'll beget volatility in the oil price. And I think the issue is which way will oil go because of it? And I think that's the big thing everybody's wondering, and why oil volatility, at least in the options, are so high.
Larry, we mentioned gold in the intro. That's moving to the upside, hitting a 6-year high. A lot of this or because of the fact that investors are flocking to safety. How much upside potential do you think gold has at this point?
Well, I think it definitely has potential to go higher. Let's back up a little bit and just remember that before May, which wasn't very long ago, the safe haven was really U.S. denominated bonds, like the 10-year. There was a lot of upside potential. Rates were stable, so that was a safe haven. It was the wrong kind of crisis for gold. But since the last Fed meeting, everything has changed. And, gold has been viewed as a cheap hedge with regards to inflation and thus the price. And so if the Fed continues to cut, even if we get some inflation, that's going to be bullish for gold. So can gold go higher? Yes, but I do think there's a lot of sellers waiting to unload it from where it was in 2010 and 11.
Hey, Larry, what about equity valuations right now? We have the S&P just off its record high, Dow not too far from that either, although both moving to the downside today. Do you think there's still time to invest in equities?
Yeah, I would never tell somebody to get out because we all know less than nothing. But from a top-down perspective, the way I look at it is just the valuations. The valuations of the S&P 500 for 2020 continue to go lower. They were as high as 183. Now they're 178 and drifting lower. So that puts the S&P 500 at a 16.6, 16.7 multiple, which is higher than history. So with that said, I just wait for a pullback if you're looking to diversify into the S&P 500. And also bear in mind that this rally we've had has been quite masked. I mean, it wasn't as it appears. I mean, there's a lot of sectors, banking sector, energy sector, cyclical sector, have not benefited from this rally. So there's still some sectors that are really cheap relative to the market.
All right, Larry, thanks so much.